What's going on, everybody? Welcome to Market Menace Trading. I'm Jonathan Thompson. We are going to be doing a little TA. I'm going to do a little bit of live trades. Welcome to the channel. This is a newly formed crypto analysis channel. This is also where you can come to find live trades, which I'm going to be doing now. Actually, I'm sorry, I'm recording my trades now, and I'm going to be posting them here to the channel, but I will also be doing live streams, and I'll go ahead and announce those as soon as it's appropriate. So yeah, I just wanted to have a place where I could come to and I could, interact and be an evangelist for a space that has completely changed my life. For those of you that don't know, I'm an early Bitcoin adopter. I've been in the space since 2015. And I am a career day trader. So what I'm going to be doing today is I'm going to take you through some of my setups, take you through the trade that I'm in right now. And if you guys have any questions about trading, if you have any questions about crypto in general, I am first and foremost an evangelist for this space. I believe in the sector. I believe that this is something that is going to change the face of finance as we know it. So it is, in that regard, it is my responsibility and my duty, in my opinion, to educate as many people as possible about this, because it's a game changer. Okay, so that's just a little bit about me, a little bit about the goal of the channel here. Twitch is going to be coming online soon, and also I'm in affiliation with Cool Nerd Crypto, which is a Facebook group of like-minded individuals. Shout out to Mansa Musa and the entire Cool Nerd community. That is where the majority of my content has been for the last 2 or 3 years. And feel free to check that out. It's a great group. All kinds of little gems in there as well. And I try to post to that pretty regularly. But the primary source of information for Market Menace Trading is going to, as of right now, be YouTube. Very, very soon, it's going to be moving into Twitch streaming, as well as lives on all of the other types of platforms. Telegram will also be coming online shortly. Okay, so let's go ahead and look at this trade. I want to take you guys through the setup a little bit. I want to show you what drove me to take this position. I'm in a very, very conservative long on Bitcoin as of right now. And the reason that I went ahead and took this long was because I could see that Bitcoin is putting in a lot of it's very choppy, very, very, very choppy right now. And as I look at the 15-minute chart here, I can see a couple of things. The bias is not strong one way or the other, in my opinion. Now, we do have kind of a symmetrical triangle here, but that's not really how that's not really what I'm basing the trade on. I'm only using that because I want to know where retail traders are going to be putting their stop losses, and use that information to my benefit to try to anticipate where banks are going to be trying to sweep the liquidity. Okay, this is a concept called smart money concepts. Is becoming very popular, and it's an outstanding strategy for trading choppy markets. And I will do a video breaking down the fundamentals of the smart money concept trading strategy. But for now, I just kind of want to take you through this trade. If you guys have questions about any of the verbiage that I'm using, any of the, what you would maybe consider jargon, please let me know in the comments, and I will do my best to field every single one of those questions, okay? All right, so let's get into it. So first things first, looking at the 4-hour, I can see that Bitcoin has, after that huge rally, where we went from about 24,500, right around there, in late June, we had a really, really powerful move up, setting a new annual high at about 31,000, which is right in line with the previous swing high that we had in April, okay, which was, go ahead and show that to you. which is in the same area. The previous swing high that we had in April was 31,064. We temporarily broke that, but it wasn't really well sustained at this point. And since then, Bitcoin is really chopping around. Now, we've had a lot of outside factors, a lot of fundamental news coming out about Bitcoin recently. Most notably is the ETF, the spot ETF requests from these very large asset managers, namely BlackRock, Fidelity, Deutsche Bank, WisdomTree, and the like. Also, one that doesn't get talked about is Kathy Wood's ARK Investments has also submitted a Bitcoin spot ETF request that actually was done before all of the BlackRock, all of the Fidelity news had broken, and that has not been kicked back yet, to my knowledge. So she's kind of a dark horse in the spot ETF race, in my opinion, and she's certainly one to watch out for. So in any case, when it comes to this trade, it's a very, very conservative trade that I'm in right now. I just wanted you guys to see a bit more of a zoomed out chart so that you could get an understanding of what's happening here. Now, on a longer time frame, when I look at the daily on Bitcoin, I can see that there's all kinds of imbalances to the downside, and those voids, those inefficiency zones, the areas where Bitcoin pushed really, really hard, and a lot of those buy order people who wanted to buy were not able to buy during these big pumps here. That means that there is a huge fair value gap. I mean, there's actually two. Let's just call it one, going from about 27,100 to the very bottom of this pattern at 29,550. Okay, so there is a huge imbalance there, and that may very well, in a longer term, over the course of the next few days, or maybe even, today, it's possible that we could end up getting a push down to correct some of that imbalance, maybe all of that imbalance. I don't think Bitcoin drops here in a day. I don't think it goes to 27. Okay, it looks like I got stopped, and that's fine. I had a very, very tight stop loss for a reason, because the bias was not strong one way or the other. So essentially, it was really just a coin flip on that one. So it looks like Bitcoin's going to have to chop around just a little bit more before it gets a directional bias move. But it was putting in on a much, much smaller, very, very zoomed in time frame. Pretty decent structure that I was hoping was going to get some continuation. Clearly that did not end up being the case, but I will still break down why I took the trade. So that imbalance is gone, also known as a fair value gap. So what I will show you guys now, what I want to drive home, one of the main things that I'm going to drive home on this is trend. On this channel, I mean, it is trend. It's very, very, very important to understand who's in control. Are the bulls in control? Are the bears in control? If so, why? As you approach a trade, you should be thinking to yourself, what is the reason I'm taking this trade? Why am I trading this? Now, for me, the reason I just took that trade was, number one, we are almost done with this little consolidation here. Or, no, it's not really a little consolidation. This has taken place over the course of the last day and a half or so. But in retrospect, zoomed out, it's not really a big consolidation, but it is nearly done. And markets are very much, they are very much like rubber bands. Actually, bad example, bad metaphor. This pattern right here, think of it as like a tube of toothpaste. Like, this is one of my favorite analogies when it comes to describing consolidation phases. These are areas where the price is going to bounce between certain support and certain resistance. So resistance is here, support is here, and you can see that is diminishing as you get the travel through the pattern, touching the various trend lines to the top and to the upside and the downside. Pressure is building in this tube of toothpaste. Imagine you are rolling that tube of toothpaste from the back of it, and you're like rolling it towards the cap. Eventually, that potential energy is going to have to be released one way or the other. Now, I'm not going to speculate on direction based solely on pattern analysis. That is a good way to get wrecked, in my opinion. There are a lot of traders online, a lot of guys online that are preaching that, talking about, you know, trading only using support and resistance, and they're trying to sell you something, the idea that you can make money simply by interpreting these types of patterns. And I'm telling you, if you do that, you're going to get wrecked. If you use only that, you are going to get wrecked. Like, that is not an effective way to trade. So if you're here on this channel, that means that you're looking for something. You probably have tried to trade on your own and using a strategy that is similar to that. And nobody can blame you, because the market is absolutely flooded with, the educational market is absolutely flooded with the idea that pattern analysis like that, using only that, is an effective way to trade, and it's not. I think the smart money concepts that this channel employs and other channels also employ are a much more effective way of trading. And I think that your guys' returns are going to be infinitely better if you adopt that strategy and you learn to interpret price action. Because when you think about trading, the concept of trading, every trade that has ever occurred has occurred based on a trailing indicator of some kind. Now, when it comes to scalp trading, or when it comes to day trading, the time is money, basically. The seconds really count. They really, really do. They can make all the difference between a good entry and a shit entry, pardon the language. So it seems to me and other traders that the best way, the most efficient way to make money in these markets is going to be based on price action analysis, as opposed to some magical indicator that is going to tell you when to get in, when to get out. Like, to me, I think indicators have their place. I do. And I even use a few of them. I'm a big fan of the RSI. I use RSI all the time, but I only use it in support of determining a bias. I don't take trades based solely on RSI, in the same way that I don't take trades based solely on things like moving averages, exponential moving averages. I think they are very useful, but I don't think that they are enough. I think they need to be used in conjunction with a strong fundamental understanding of price action, and that is what I'm going to try to drive home in this channel. So if you're here, that's the type of content you are exposing yourself to. So congratulations. That means that you are starting to graduate in your trading experience. You are starting to, not to sound condescending, but grow up. And that's outstanding. And you're very welcome here. And I will do whatever I can to help anybody become successful, because it sucks. Like, I mean, your first year in trading, guys, like, your goal shouldn't be to make wealth. Your goal should be to survive, and if you're here, it means that you are taking your trading seriously. And I'm going to do whatever I can to make sure you guys are able to be successful, because a rising tide lifts all boats in the harbor. Wow, I butchered that. But whatever, I digress. So, what I wanted to, all of that to say, sorry, that was a bit of a tangent. I'm very, very passionate about this. I love it. It's my favorite thing in the world to talk about. So, of course, it makes sense for me to have a YouTube channel where I get the opportunity to do exactly that. So, let's talk about some of the setups that we're looking for. I will break down the trade that I just took a little bit ago, which is still open. Oh, okay. Sorry about that. It did not close the entire position, so I'll go ahead and do that now. There we go. Sorry about that. Okay. I mean, it was like a $50 loss. I had a very, very tight stop on that because it was difficult to determine the bias. So, all right. But I do want to talk about why I took that trade in the first place. So, in order to do that, I'm going to zoom out a little bit. Let's go to the 1 hour. zoom in on this chart a little bit using a higher time frame. And a couple of very important things are what I'm looking for when it comes to taking a trade, particularly when it comes to reversal. So what I need to see in this order is I need to see a clear trend one way or the other. In this case, I have a very clear, I'm going to make this as big as I possibly can so everyone can see it. I have a very, very clear downtrend. Pull this down. I have a very clear downtrend from the swing high here at 31,553. We had an absolutely monstrous pullback. I mean, huge. Created all kinds of what's known as inefficiencies on the way down. Particularly up here is the one that I have my eye on. When you hear me say inefficiency, guys, that is in reference to something called a fair value gap. Okay, and a fair value gap is a void in the market. Okay, and you're going to hear me refer to this all the time. Okay, I will get rid of this one because for now I want to show you the ones on the 1 hour time frame. So I'll go ahead and mark this. There is a huge inefficiency up here, a void in the market full of orders that never got filled. Okay, that is that range between 30,866 and 31,054, which is a key psychological area, particularly in this pattern. So that is going to act, in my opinion, as a magnet to price. So being that we are consolidating here, I think that that is the next area of liquidity that needs to be targeted. Okay, so I got my eye on that. That's not the only reason that I took this trade, though. But it is a very important reason because I had a swing high to a very important area, an extreme order block, an extreme point of interest. Okay, an area that banks will target for the liquidity of the stop losses of retail traders that are in that zone. Okay, all kinds of short position. All kinds of people went short when Bitcoin visited that zone back on the 3rd. And they all had their stop losses in this area somewhere above this liquidity, which is a perfectly reasonable stop loss. Perfectly reasonable trade. As a matter of fact, it's a fantastic trade as long as you got out before it started to re-rally again. But notice that when it came back to this area, when it came back and it revisited that area, okay, the same area here, as soon as we broke that previous swing high, you saw a really violent wick up for a couple of $100. That was the liquidity getting swept. Those are all of those short stop losses getting annihilated. And yeah, some long positions I'm sure got wrecked as well. But so that was really important. That is a touch of a key liquidity zone, a key point of interest, an extreme point of interest for this entire pattern. Okay, so now after that, we started to push down. We created that imbalance right there. Okay, so that has not been mitigated, which means that has not been closed. That has not been retested. Okay, we then pushed down very violently and set a new a lower swing high. Okay, we then pushed down one more time, setting a lower low. But then something very important happened. We had a lot of buying pressure, and also the area that we had this big wick right here in is the opposite side of this area. This is also an extreme order block. This is also an extreme area of previous liquidity, and I believe that what you saw with that wick is the sell side liquidity getting swept, and that is a good indication that you are starting to look at reversal. Now, I mentioned earlier that I use RSI. This is a good example of that. So on the 1 hour chart, I can see that the RSI was all the way was down here on that swing low, and I can see that the RSI is starting to improve, at least on the hourly. Okay, So that's one way that I use RSI. Mostly I use it for divergence, but I'll get into that later for another video. But you guys will hear me talk about divergence all the time. So we're testing the top of this trend line now. I'm not going to get too terribly excited though until I see it break the previous swing high. So looking something more like this. But that's just that pattern. That's not what's really important here. What's really important is the fact that we swept the sell side liquidity here with this candle. We pushed up, set a swing high, and challenged this little swing high right here. It did get rejected, but we came down and we set a higher low. We then pushed up, and this move right here is very important because we had a what's known as a change of character or a market structure shift. Okay, and that was at a key area right there. It's when the price revisits and takes out a previous swing high. In this case, we had a swing high here. So after we set the swing low of the pattern, we came up, we set a new swing high, we set a higher low, and then we broke that market structure when we did this. Now, it didn't get continuation. Instead, it pushed down and continued to consolidate. But notice that every time it set slightly higher lows. So now something very interesting has happened on a very, very small time frame. On the hourly here, we just broke this. We just had what's known as a bullish break of structure when we just tapped this. Now, we haven't gotten any kind of continuation here yet. So there's a lot of, there's still a lot to go wrong. And in the interest of full transparency, the real trade here is not that. The real area that we need to break, there's actually two, before I can really start getting excited. Number one, we have to get continuation over the market structure shift here at 30,337, and I will be very excited when we actually break this swing high at 30,467. That will be a much larger time frame confirmation of a market structure shift, of a change of character. Okay. However, this still does qualify because this right here, this was a swing high on the hourly. Okay. And if I did a zoomed in a little bit more on the 15-minute, you can see it even better. Okay. So that was a swing high there. Obviously, an argument could be made here as well. That this area, this zone, this order block, this area is what needs to get broken in order for us to get really strong continuation that has, some actual bias behind it. So in any case, I had the market structure shift here. It did not get continuation. However, when it came back down, even though, and this is where pattern analysis will get you in trouble because you're seeing a pretty clear, arguably triple top, arguably, what do you want to call it? Head and shoulders. It doesn't quite meet the criteria for a head and shoulders reversal, but it is very similar, and they generally have the same results. Seeing that, normally, using only pattern analysis, you would think that this is incredibly bearish, but that is not even close to the most important part of this pattern. The most important aspect of this pattern is the fact that we are continuing to set higher lows. See that? And now what needs to happen is we need that market structure shift to hold and get some sort of continuation over it and pull back to confirm support. And then we will start looking for what's called bullish break of structure. So when it returns here, that will be a bullish break of structure. Let's say it does the move that I just drew. A bullish break of structure would occur after it sets this swing high, pulls back, and then breaks it again, getting continuation over and over again. That's what you're looking for. Now, I think that is the more likely of the two scenarios, bullish versus bearish scenarios, because of the imbalance that's up here at about 30,800 to 31,000. I think that is going to draw the price, and whether or not it gets continuation when it gets there is anybody's guess. However, I think that there is a strong possibility, based on the chart, based on the reversal structure that I'm starting to see on slightly larger time frames, that there is a very, very good chance that we are going to go up there and revisit that. Okay. So that's what I'm looking for. That's why I took that short position. That's why I took that that's why I took that long position, because I'm trying to catch the beginning of that move. So my entry was right around here somewhere. I want to say it was like 30,200 or so, and then I had my stop loss just $50 below it. And the reason I'm doing that is because I'm exercising extreme amounts of risk management when I'm trading in choppy markets, because the bias has not been confirmed in either direction. The bias has not been clearly defined. So until you get those types of moves, those very, very obvious, super powerful moves, it is very important to exercise very, very tight risk management. So when you enter a trade, you have to make sure that your stop loss is, number one, in place, which is a huge mistake that traders always make, myself included. I've done it so many times, I can't even begin to tell you how much money I have lost from failing to put a stop loss in, either in time or at all. It's cocky. It's a good way to get rocked. It is a good way to blow your fucking account, pardon the language. Like, if you're trading, if you are in a trade and you don't have a stop loss, I don't give a shit how experienced you are. You are a amateur. You're not just an amateur. You are wildly irresponsible. If you are entering the most volatile market in the history of mankind and you are not using a stop loss, in my opinion, you deserve to blow your account. So if you're a member of the Market Menace militia, make me a promise that you are going to use stop losses on every single trade. And we don't average down. We are not doing that. We do not do that on this channel. Averaging down is for people who don't accept the reality of their losing situation. Take your loss. There is always another trade. Always. There will always be another opportunity. Here's one right here. Let me show you that. You want to talk about imbalances. The bears have failed to push this price lower. The bulls, however, have successfully had a small market structure, or a bullish break of structure, when they took that this little swing high right here out. Okay, we were also at the end of the pattern putting in higher lows here. An imbalance, a void, a inefficiency has appeared on the 15-minute chart, and that's here. Okay, and what that means, and I will zoom right in on this. In order to spot these, another way of saying this is a fair value gap. It is a good place to take a trade because the price will likely return to it in order to fill the void, if that makes any sense. Okay, so what I'm going to do, you can spot these in a 3-candle pattern. Okay, candle 1 is the red candle here. Candle 2 is the very energetic move up. Candle 3, which technically hasn't closed yet. So this would be what's known as an implied fair value gap. It is likely to create a fair value gap, but the top of this fair value gap needs to be adjusted based on whatever the swing low of the current candle ends up being. So if it comes back down here, it may not end up being one at all. Like as of right now, this is where it is. Now, if I zoom in on a tighter time frame, I can probably get a better idea of where that imbalance is likely to occur. All right, so on the 1 minute, you can see that it actually envelops a few candles. The actual 1 minute imbalance isn't until down here, which is kind of a dangerous trade, actually, because that is below the previous swing high here. So this is likely to pull back down to fill that void. So what I'm going to do is, because that is, excuse me, the 15-minute is pretty much gone at this point, I'm going to use the 1 minute for entry. So I can see that there is that imbalance here. I have a nice bullish order block here, which is this little red candle that preceded the powerful move up. Or excuse me, the green candle, which preceded the powerful move up. That will be a good area to have a stop loss for a very, very small trade, which is what I'm going to do now. So what I'm going to do is I'm going to go ahead and set this trade up, and I will be using a limit order to do so. And I'm going to put this at 30,000. Sorry, let me go ahead and do this first. Okay. That will be at 30,211. I will select my quantity size. I'll do 1,500 on this one. And also, this is a levered trade. Here is my disclaimer. If you are going to trade on leverage, understand that yes, your profits can explode, but so can your losses. So I'm about to take a 30x levered trade with $1,500. It should be about 1.5 Bitcoins worth of 1.5 Bitcoins, which is about a $40,000 trade or so, $45,000 trade. Okay, so I'm going to go ahead and get that locked in. This is going to be an order that is good until close, so I will go ahead and put that there. The reason I'm taking that trade there and not here is because, number one, I can see that I have a buy-side liquidity candle on the 1-minute chart getting swept. Okay, that means that, you know, I have a very powerful move back down, and I didn't really set a convincing high. The trend line is here. So I think that it's very likely that that was just kind of a head fake. And if I end up missing the trade, then I end up missing the trade. That's fine, because there's always going to be another trade. But as of right now, I'm not convinced that this is going to just rip now. But there are other things that I can use in order to try to determine that. Number one, in my most commonly used tool, and a commonly used tool in all of trading, is the Fibonacci retracement. What I'm actually going to be using is the inverse Fibonacci retracement, which is where I use my initial anchor point at the swing low of whatever I'm measuring, and I put the top anchor point at the top of the pattern. Okay? This creates certain key areas that are commonly used by traders to enter and exit. The most important is going to be the Fibonacci golden pocket. Let me go ahead and move this out of the way. The golden pocket is the 0.618 Fibonacci zone. I want you to, when you see this, I want you to think of it as the gateway. If this price comes down and holds support over the top of the golden pocket, then it is likely to get continuation back to the upside. However, if the golden pocket fails, you are likely to move down. Okay, now if that happens, and I believe it will, in order to correct the inefficiency, I have my order ready to go here at 30,211, which is, I mean, it's not really that big of a move at all. It's only about a $40 move down. Bitcoin can do that in a freaking millisecond. And if I miss the trade, then I miss the trade. Excuse me. There's a couple things when it comes to entry in fair value gaps. It's very hit or miss, man. Like, you know, they do tend, particularly on the smaller time frames, they do tend to get filled. But the question is, where can you put your entry to hopefully get filled? Now, there's a couple of ways to do this. And again, there's no perfect way to do this. Everyone's going to have their own trading style when it comes to entry. But for me, what I like to do is, if I have nothing else to go on, I will put my entry at the 50% mark of the fair value gap. Now, that's if I don't really have a lot of like other information leading up to it, any significant areas that it can interact with. And actually, now that I'm zoomed in on this, I'm starting to see that there are a few. Number one, inside of the fair value gap here, inside of this green box territory, okay, there is the 0.786 Fibonacci zone at $30,218. I can also see that I've had a significant price rejection, a price rejection here at 30,216. Now, that means that area was resistance. It was an area where Bitcoin tried to get above and was at one point rejected. So if the price does come back down here, those are going to be the two areas that I would anticipate there'll be some sort of potentially a rejection, support held, and then get continuation. So that's going to be at the 0.786 area here, and right below it at this area, this little swing high that failed. So that's at 30,216. So based on all of that, I think what I will do, is I will move my entry up to that area, to just below. I'll actually do it right on the, just above the 0.786 Fibonacci zone. Oh, no, I won't. I'm going to have to cancel the order in order to do it. My mistake. Let me try that. Let me just try one more time. Okay, it's not going to let me do that. That's irritating. Let's try it again. Limit order. Select my quantity. And I'm going to go ahead and put that at 30,220. Okay. I'm going to go ahead and open that long there. Okay. And now we wait. So down here is my open orders. You can see that I don't have any open as of right now. Actually, are you guys not able to see all of that? I don't think you are. I think you can only see to... Okay, you can only see to there. So let me go ahead and shrink this down a little bit so that you can see it. Because I definitely want you guys to be able to see that, because I have to interact with it pretty often. All right, that should be good right there. Okay, you can see I don't have any current open positions, but I do have an open order here. Okay, and that is going to be, you can see here, it's for Bitcoin USDT perpetual, because I'm trading futures. By the way, the exchange that I'm using, I have no affiliation with, but the exchange I'm using is by far my favorite exchange I've ever used. It's MEXC, MEXC. Fantastic. It is the exchange that I've been using that has the most options, that has the most versatility in the tools and the weapons in your arsenal in order to be a successful trader. All kinds of cool order features. Most notably, and at least my favorite, is the fact that when I'm in an open position, when it comes to like stop losses, I can actually just grab them and adjust them on the chart, and they will automatically populate to where I drag and drop them at, which is extremely important. Okay, so here's a good example of the golden pocket doing its thing. As of right now, and this is a 1 minute chart, guys. This is as zoomed in as you really want to be. You know, there are some packages that you can buy that, you know, like on TradingView, for example, I think it's the Pro Plus or the Premium, where they will give you 1, 5, 10, 15-second candles. Like, honestly, you don't. There's not really any need for that, in my opinion. I mean, some people like them, but to me, that's a quick way to have a heart attack and just induce tremendous amounts of anxiety. Like you watch Bitcoin on a 1 second chart. Good luck, man. All right. So the golden pocket. You can see that we're getting some pretty good interaction with it. The cool thing about technical analysis, guys, in a more broad sense, is it's kind of a self-fulfilling prophecy. The reason that it works at all is because there are so many traders using it. And there's kind of, you know, there's rules surrounding technical analysis. And if enough traders abide by those rules, it gives you the ability to start anticipating what markets are going to do based on the price action. Okay, so that's very, very important. So I can say that I'm saying that because I'm using the Fibonacci right now, and I can see that we are getting strong interactions, at least on a very small time frame as of right now, at the key areas that you would expect to get interaction. So I wouldn't be surprised to see a little hesitation in the price here at the bottom of the 618, the golden pocket. Is it just going to blast through? We have already broken it once. So, okay, cool. So that looks like weakness to me on the Fibonacci Golden Pocket, which means that, in my opinion, we are probably going to get the move down to get my order filled here at the just above the 786. And I'm going to go ahead and put my stop loss below the primary trend line of the pattern here, or at least of this little short-term pattern here, which is, that's about $20 or so below the previous swing low that caused the energetic move in the first place. So what I'm doing is I'm trying to avoid becoming a liquidity lunch, a liquidity snack for a big investor or a big bank to come in and sweep these stop losses. So yeah, that's where I'm at. So we will see. Right now, the golden pocket actually seems to be holding a little bit. We got a bit of a little bit of buying pressure there on that last candle, and we have now revisited and re-entered the golden pocket. So if that ends up holding, that's actually pretty good because it's actually a higher low. This might very well hold the golden pocket and press up. Now, the imbalance down here, I mean, mind you, this is only an imbalance from about 30,200 to, I mean, it's only $20. It's not a huge imbalance. It could absolutely be ignored. But generally speaking, on the smaller time frames, they do at least get revisited in some way. I think a move down to the 786 is likely. And honestly, it may very well come right down and test this little exponential moving average here on the 1 minute. Now, if I'm not mistaken, that is the 300. Okay, that is the 300 exponential moving average on the 1 minute chart. Another way of saying that is the 300 minute moving average. Okay, that is the average price movement charted out, displayed on your chart, of the last 300 minutes worth of Bitcoin price action, if that makes any sense. The heavier, the larger the exponential moving average, in this case the 300, the slower it's going to move with price action because it takes longer for it to be affected, as opposed to this right here. This is the 9 exponential moving average here. And another way of saying that is because I'm on a 1 minute time frame, I'm on a 1 minute chart. That is essentially the 9 minute moving average. The yellow line right below it, the other moving average here, that is the 21 exponential moving average. The 9 and the 20 exponential moving average, the 9 and the 21 exponential moving average are two of the most commonly used exponential moving averages based on any time frame. They are very, very, very good at determining immediate short-term price action. And now we have just gotten back above them. That's actually that's support on the 50-minute moving average, but more importantly, that is support within the golden pocket. And we have taken out a previous little swing high here, which isn't, it's not dramatic. That's not a big move at all. However, if this holds, it could be setting up a move to come and take out this, which is much more significant. That's about an $80 or $90 move there. So that's what I'm looking for in order to get continuation to the upside. Now, that means, of course, if that happens, that my order is not going to get filled. And at that point, I would have to make a decision as a trader as to whether or not I think that this is kind of a hesitation or an inducement zone, which is think of it, when you hear inducement zone, I want you to think about it as a pause mid-rally, a checkpoint in the middle of a marathon. Okay? If the price moving from here to here is the 26-mile marathon, then the inducement zone is kind of like the halfway pause point where they can, stop and sit for a second maybe and get some water, relax for a second before getting continuation and, to the end of the marathon. Same idea here. Inducement zones are pauses mid-rally in the move of an asset. Okay, and you will see them all the time. They are very trappy setup, in my opinion. Trying to trade an inducement zone is a very risky proposition. You know, of course, I'm very tempted right now to just take my entry and move it up here because, hey, maybe I get a rally. But you know what? I don't have any confirmation of that. I don't have any confirmation whatsoever that this is going to come up here. As a matter of fact, until it does come up here, the bears are still in control. The only real confirmation that I have here is that I'm setting lower highs. Well, first I have the buy side liquidity getting swept right here. Okay, that big long wick. Okay, I have the top of the trend line here, this thick white line here. That's resistance. That's the resistance for the entire symmetrical triangle pattern that I just showed you at the beginning of the video. So that failed to get above that. So we pushed down, came back up, failed again, created actually a small imbalance right here as well. Oh my God, that is so sloppy. The time frame, I'm so zoomed in on the chart that when you use the paintbrush, it will jump from candle to candle, and I'm so zoomed in that that's what it's doing right now. So hang on. So anyways, I'm getting the move down, a lower high, another another push down here, down to the golden pocket, a failure to break back above, so setting a lower high. I then re-entered the golden pocket, taking out this swing low, by the way, and are now consolidating and chopping around. This, to me, is an inducement zone. There's not really a clear direction here, so taking a trade in this area is extremely risky, and price likes to follow prevailing trend. So on this very zoomed in time frame, the 1 minute, the prevailing trend as of right now is down from the swing high at least. So it is very likely, in my opinion, that we are going to come down here at least with a quick wick and try to correct some of this imbalance, if not all of this imbalance, before we get any kind of continuation to the upside. That's my opinion. That's the bias that I choose to believe here with this particular pattern. So it's best guess. I mean, that's the truth. It's best guess, guys. Like, and that's one really cool thing about trading is if you think about it in terms of probability, okay, you really only have two outcomes. You will either be right or you will be wrong. You have a 50-50 chance, okay, that your bias ends up being correct, okay? So if I flip a coin 4 times and I say I'll give you $100 every time it's tails, and you have to give me $100 every time it's heads. If I flip a coin 4 times and 4 times it's tails, then my account's blown. I was wrong 4 times in a row, so I have to give you $400. Let's assume I had $400 in the account. Sorry, should have said that. So, your account's blown at that point. But the cool thing about, let's expand on that a little bit. I'm going to go off on a bit of a tangent because I think it's kind of important, particularly for new traders to understand, because it rolls into risk reward. If I then take that same quarter and I make the same bet, but I say I do 1,000 or 10,000 coin flips, then the laws of probability say that half the time I'm going to be right and half the time I'm going to be wrong. So it's break even, right? Now, the cool thing with trading is if you believe that you're either going to be right or you're going to be wrong, and there's only 2 outcomes, which there are, then when you're right, you had better be right and more profitable when you are right than when you are wrong. The key to trading isn't always how much money you make, it's how much money you keep. And it's how much money how well you can lose. The best traders in the world know how to lose well. And what I mean by that is when they are setting up their trades, they are not taking trades that they are not at a minimum going to be making at least 2 to 1 on their money versus their risk. So if I'm risking $50, then that means I need it when I'm right, I'm going to make a minimum of $100. And if I'm right 50% of the time, then that means I'm going to be up 25%. Does that make sense? I hope that makes sense to everybody. So yeah, I mean, the poker players understand this very well. It's pot odds to them. So they're getting a certain offering on their risk versus the pot. And that helps them determine whether or not it's going to be a good call or a good fold long term as far as profitability is concerned, if they're being offered good pot odds. Now, it's not quite the same. Poker, you don't want to make a call unless you're getting like 3 to 1 on your money, usually, or more when it comes to pot odds. So it's not quite the same, but the concept is the same. You want to risk less than you're able to make. And the cool thing about trading is I can literally be wrong 50% of the time, but when I'm right, I'm making 2 times as much money as when I'm wrong of what I'm losing, then that means that I am long-term profitable. And that's the cool thing about trading is I have the ability to do that. Now, obviously, 2 to 1 is the bare minimum. The cool thing about this strategy, about the smart money concept strategy, is it allows you to potentially find setups, and I find them every day, that are in the realm of 4 to 7 to 8 to 1. Like take this trade right here. Let's say, for example, I go ahead and this trade gets filled, okay? Let's say that happens, right? So at a minimum, sorry, pull this out just a little bit. At a minimum, I'm doing 2.55 to 1. But actually, I hadn't even adjusted my actual target. My actual target for this trade, in the event that I'm able to enter and not get stopped if I survive the initial entry, my target is going to be the top of this pattern right here. Which gives me a 6.5 to 1 risk reward. Now, if we get some kind of continuation there and we start sizing up the big imbalance up here, you can see how this trade setup, here's the inducement zone here, by the way, the pause mid rally. So that's going to be an area that I'm going to have to keep my eye on. But even if it just rallies to there, that's 10 to 1. Now, if it blows through that, which it did on the way down, when it was created, it got the continuation, so it will likely interact with that area when it goes back up. But let's say it blows right through it, then the bottom of this fair value gap, the bottom of that imbalance at 30,870, I mean, that gives me a 16 to 1 risk reward. So you can see how this trading strategy can be very, very profitable if it's used properly. So that is a really, really good example. I mean, I'm only risking about it's a big value trade. Like there's a lot of value in the trade because it's a heavily levered trade for $1,500. It's a 30x levered position. So I'm essentially trading with about, at $50,000, $40,000, something like that, right? But again, all of that to say, I'm really only risking $50 in the event that the trade gets triggered, and I'm actually able to set a stop loss because I can't do that until it's actually been triggered. But yeah, that's that's kind of the idea here, if that makes any sense, guys. So I'm looking for optimal, high quality trade setups. Areas that are setups that are likely to be profitable. By the way, this rejection here, that is a pretty clear rejection. So that, in my opinion, was a head fake. We are almost assuredly coming down to fill this imbalance, and I actually am considering adjusting my order to a lower entry based on that chart. So on the 5-minute, that's a retest of the 21 exponential on the 5-minute, which is actually a good sign for continuation. So now, let me just look at this, pull out my Fibonacci one more time. I mean, we're still chopping around inside the golden pocket. However, that is a nice touch of the 5-minute 21 exponential moving average. Now, I'm not going to get excited on that until I see some kind of continuation up. If that happens, and we, let's say we mitigate this imbalance here. Let me go ahead and get rid of this so you can see it. On the 5-minute, there's an imbalance that was created here, a inefficiency, okay? And that's right there. Another way of saying that, you guessed it, is a bearish fair value gap. Price is likely to revisit that. Now, will it get continuation when it goes there? I don't know. But it is likely to return to this area. Now, this could actually be a great opportunity to take a very small short position as well. As a matter of fact, the bias just in this very zoomed in chart for a very short-term trade is actually more in support of a bearish order, a short position, because I have the buy side liquidity taken here. I have a powerful move down, an imbalance, and an efficiency, a fair value gap. I have a return to the golden pocket, a significant high, and it would not be out of the question to take a short position here, which I kind of hope other people do, and then I hope they get wrecked and this area gets disrespected, because what they're going to do if they take a short is they're going to put their stop loss right there. They're going to enter on the fair value gap to the upside there, and they're going to put their targets down here, whatever. It's irrelevant, right? So if the price returns here and blasts through here, it's going to liquidate all of the stop losses that are up here, which is going to attract price, and banks will start to try to size up new areas of liquidity. There's the reentry into the fair value gap. I actually think that it will result in a bullish break to the upside. I think we will get a bullish break of structure of this swing high here. That's what I think is going to happen. I think my imbalance is going to be ignored because that is also a partial decline right there. So I think a lot of people are taking the short positions here, but I'm looking at the order book over here on the right, which I will show to you guys actually, because that's very, very important. Here's the order book. This is what I'm looking at. Top here, the red, that is the bears. That is the short position, the selling positions in Bitcoin. Here are the buying positions. This is in $1 increments, so it's very, very zoomed in. But I can actually, if I so chose, I can actually put this all the way up to $100 increments, $10 increments. But since I'm doing scalping, I'm keeping it very, very short. I want to know where it's going to react, literally $1 at a time. Just to get my initial entry. But yeah, if I was doing a longer term trade, like, let's say I was using the hourly or I was using a daily chart, I would zoom out on that order book as much as possible to try to anticipate areas of resistance and areas of support as well. Gotta learn how to use the order book, guys. If you're not using the order book, you are making a serious mistake. Okay, back to the chart. We are back inside that fair value gap. That's going to be a very nice 5-minute close. I think there will probably be a slight return just to the bottom of the fair value gap. And I am probably going to adjust my entry based on that. I think we're probably going to come right there. And I can put my stop loss here. Wow, actually, you know what? I don't think I'm going to get the chance. I'm not going to get the chance. Go ahead and close this out. So I am going to enter on a scalp. Very, very quick trade. So what I'm going to do is I'm going to set my order size and I'm going to start looking for entry points. I'm going to open the long there. Okay, so I went ahead and I entered there. That is my entry point. Kind of a risky one. It's at a serious area. But again, I'm not going to be risking too terribly much here. So I will go ahead and instantly go ahead and set up my stop loss, which is going to be at 30,000. Sorry, 30,227. And that will be for the entire amount of 1.5364 Bitcoin. And you can see that that automatically populates there. Oh, that's a short position. Let's try that again. There we go. That's better. So my risk here is 0.14%. My target is actually not going to be this swing high here. It's going to be much, much higher than that. I think probably what I will do now is I'll start marking areas that are going to be likely targets. So number one is going to be here. That would be a good take profit. You'll hear me refer to that as TP1, TP2, and that is take profit areas. Okay, TP1, TP2, TP3, etc. These are areas of significant price interaction where Bitcoin is likely to be interacted with on the way up. Okay, that's a pretty powerful one. I think that's a decent area right there. That will be my top upside target, and that will give me a risk reward of 4.2 to 1. Okay, so I risk one part to make 4.2. Okay, so that's good. That's very, very good. And hopefully, so now that was step one, understanding who's in control, trying to find a good entry. Okay. Step two is mitigating your risk as much as possible. Okay, monitoring your trade. So right now, this trade is not in a profit for me. This trade is down $11 as of right now. Okay, not much, but I do want to watch it. There must be another thing that I like to do is I like to try to figure out areas where if the price reaches prior to my stop loss, that I will start considering scaling out of my losing position. If I was taking a larger position, I would really be concerned with that. Right now, I'm not. I'm really only risking about $50 on this trade or so. It's not much. So I'm okay with accepting that loss. So I'm not going to scale out of the position or scale out of a losing position. Okay. But I will say that this is concerning. We have the buy side liquidity swept here, a failure to set a higher high, the push down, fair value gap for entry. And now we have closed the imbalance. That is gone. That has been filled. And now we have to figure out whether or not this is going to get continuation or not. I can make a case that is strong for both. So this is really a coin flip here. There's no nice way to say that. So I'm just going to be as real as possible with you guys because I don't want to mislead you. You know, there is a very high probability that I end up getting stopped out on this trade as well. Because I mean, I can make an argument for both here. Now, in a longer time frame, my sentiment is actually more bullish because I'm putting in consistently higher lows, especially after revisiting that most recent extreme point of interest after we dumped yesterday or the day before, I think it was, or yesterday it was. And we've been putting in higher lows ever since then. So to me, the bulls are on a longer time frame starting to take control, and I'm waiting for them to get the break that they want so that we can start pushing up, because ultimately I want my real target to be up there at the $30,000, $30,900 range. I mean, that's a nice trade for me. That's 15 to 1 risk reward. I mean, that's a nice one for me. So, that'd be I think it'd be like 5 or no, actually, hang on. Entry is what? 286. So I mean, yeah, it's about a it'd be about anywhere from $650 to $800 trade or so in the event that it went there. But I mean, that's kind of a lofty target. It would be kind of irresponsible of me to hold it that long unless it was a very energetic move up, which it could very well do. I mean, we just stretched that market all the way down to, I think it was like 29,400, 29,500, right around there. I look at the 4 hour real quick. I don't have to guess. The beautiful thing about charts. Yeah. So we had this pushed down to 29,007. And we are just now starting to recover from that. But, every other time that we have entered that point of interest to the downside, we haven't returned to it again until we had the big push up to re-challenge this. So that is why my overall bias for right now, for the next few hours, is bullish. Which is why I keep trying to take long positions, even though I'm seeing short position setups, if that makes any sense. Because I want to catch that move. I mean, I have no hesitation in telling you that I'm being a little bit greedy when I say that. I want to catch that move. And actually, so far, I mean, Bitcoin is still continuing to put in higher lows and higher highs here on this little pattern here. So, yeah, I mean, I actually think that there's a good chance that we have what's known as a partial decline, which is after you've touched one of the trend lines, okay, you come up and you touch the next one. And instead of just instantly crashing down and touching the other trend line, you come back down partially, get supported, and then get continuation. If you're looking for a long position or you have a bullish bias, then you want to see what's known as a partial decline. That's when the price comes up, partially declines through the pattern, gets supported, and breaks out. If you are looking to take a short position, then the opposite is true. You would want to see this do something like this. I'll use this right here as the example. Okay, or I'm sorry, right here. Okay, if you wanted to take a short position, you would have wanted to see something like this: a partial decline or a partial incline, and then a breakdown. Okay, that would have showed that the bearish short-term trend was going to continue. Okay, but right now that's not what we've gotten. But again, guys, there's no guaranteed confirmation on this. Pushing back down 31 on the trade. Okay, oops. Really looking for a nice bounce yet again on the 5-minute 21 exponential moving average. Looking for that. But at a minimum, I want to see a higher low than this. There is a small order block here, which we are now testing. That order block looks like this, by the way. It's not much. I mean, there's not really a lot here. But it's this area here. Whoa. That was an area of significant price interaction that I'm hoping holds and that we end up setting a higher low. Because really, that's all that's protecting my stop loss at this point. Okay. Now, I will say this. On the 1 minute, that's gross. That's a bad-looking chart. I mean, the short position, the people who took shorts were right to do so, as long as they plan on, getting out somewhere around here, because I don't see anything super powerful to the downside. But the setup is, it's textbook. It's perfect. I mean, I could have easily justified taking a short there. So you had the run up, the buy side liquidity taken, push down, imbalance, okay, further push down, return to the imbalance to fill it, failing to set a higher low, or a higher high, sorry, and then potentially dumping. That is a textbook short entry. And the people that took that short position are absolutely, at least on a fundamental, from a fundamental point of view, a trading fundamental point of view, that is a fundamentally sound short position, for sure. So I guess we'll just see. We'll see what happens. Now, if that order block right there holds, if the order block that I just drew here, a very, very small order block, dude, it's nothing. That's a, that's a $7 order block. It's super tiny. But if it does hold, like let's say it does hold because it's being reinforced by the 100 exponential moving average on the 1 minute chart, or the 100-minute chart, or 100-minute moving average. Let's say it does hold, and this is the low for this move here. I will start to get a little bit more excited when I see Bitcoin break this level here, which is exactly where I entered actually, because that will be a bullish break of structure if it comes up here and takes that out. But obviously the more important one is going to be up here. So that's when I'll really start to, have a little bit of hope. I'd be looking for the break there, some sort of confirmation of support, and then continuation in the event that it did break to the upside. But I will say this, it does not look like it wants to do that at this exact moment. It looks like it wants to push down to my stop loss and take my money. That's what it looks like it wants to do. And I'm going to let it. I absolutely am. Now, there is an imbalance to the downside, which I originally was going to enter on, which looks like it's actually now going to get filled, which sucks because it really did look like we were going to get a nice push. I mean, we're interacting right now with, we're still interacting with the inverse golden pocket here. Don't forget that I have the Fibonacci here showing that we are still interacting with that area. Actually, right now we're below it. So, looking to set a higher low here and then get some sort of reversal up. But I'll be honest, I give that about a 30% chance of happening. It is much, much more likely that we push down below this little order block and actually go down to that 786, the original entry that I was going to do down here. So patience is everything. Best guess, guys. That's all it is. It's best guess. Hopefully we get a nice bounce on that order block. We blast through those that little cluster of moving averages there, which is the white line is the 9, the yellow is the 21, and the orange is the 50. So we are looking to test that. It's a good 1 minute candle based on what I'm trying to do. It is a re-entry into the golden pocket. It is coming up to test the imbalances here, the fair value gaps. It looks like it's sizing that up, but none of that matters if it can't get above those moving averages. And the top of that imbalance there is actually out of the golden pocket. So if it does close that, there isn't a good chance that it will push to the upside. But as of right now, it's showing a lot of weakness, and it will probably push down, stop me out. As a matter of fact, it will probably come right down to test this pattern, and at which point I will make a judgment call. Yeah, when you look at the 15-minute, it looks even worse. I got a huge buy-side liquidity candle there, another one here with a lower low, another one here. A lot of selling pressure at the top of this pattern, which we've actually seen a few times here. So this will likely fail and push down is my guess. But I'm so close to my stop loss, there's no point in me exiting the trade. I'm going to give it a chance to survive. And here we go. About to get stopped in 3, 2, 1, 0. Stop loss triggered. Q Thompson. All right. So it was pure coincidence. I didn't even know that the 9 exponential moving average for the 15-minute chart was there. I actually had no idea. Actually, you know what I'm going to do? Now that I see that on the 15-minute chart, I'm actually going to adjust this down below the 100 exponential moving average of the 15-minute chart, because that's actually pretty powerful support, or could be powerful support. I've had a lot of price interaction at the 100. I can see it interacted here, here, up here, tried to get supported here, all kinds of interaction there. So anytime you can put heavier weighted moving averages between your between your entry and your stop loss to protect yourself, or between the price and your stop loss, anytime that you can, reasonably adjust in order to accommodate for that, to give your trade the best chance for survival, it's not necessarily a bad idea as long as you're not violating your rules. Being a rules-based trader is critical for success, guys. Like, And you have to have discipline. Here's the amazing and the terrible thing about trading is there's no room for ego in it. You can't have an ego. Whatever your personality is, if you're a hyper aggressive risk taker, this market will punish you for that. If you are too conservative, this market will slowly bleed you over time because you will not take enough risk to give your trades enough time to develop. So you're going to get stopped out all the time. The point is that whatever type of person you are, this market is going to highlight it. It's going to put a spotlight on it, and it's going to show it to you whether you like it or not. And because of that, you have to have the ability to assess your own, poker players call it leaks, the leaks in your game, right? The inefficiencies in your own strategy, in your own personality, and the countermeasure to that is to have a rules-based strategy that you really understand and you stick to that freaking trading plan. Okay, and if you don't have a trading plan, you don't deserve to be a good trader. You don't deserve to be profitable, period. Like, if you are not planning your trades, if you do not have a strategy based on market conditions that you are implementing daily, every trade, then you deserve to go broke. And I really mean that. All right. And I'm not saying that to be mean. I'm saying that to help you. You have to be able to identify your own weaknesses and call them out so that you can address them. Failing to do this means failing as a trader. Make no mistake, ladies and gentlemen, 90% of traders fail in their first year and never try again. This is one of the hardest, statistically speaking, one of the hardest careers you could ever choose to do. And it's not, to me, like, those traders, they're not stupid. It's not a question of they're not intelligent enough to do this. Like, it's not a question of, is their technical analysis ability shit? Pardon the language. I think it's the intangibles more than anything. Are you able to be self-critical in a healthy way? Are you able to be disciplined? Are you putting in enough chair time? Are you studying? Are you adjusting? Are you tracking your P&L? Are you tracking your types of trades that you're taking during certain market conditions? These are the intangibles that make or break traders. You have to be able to identify your own shortfalls, because if you don't, the market will show them to you anyways. And then you get to sit there with a stupid look on your face wondering, why am I broke? Why is my account blown? Why am I screwed? Why are me and my kids eating ramen noodles, for the 15th time this month? You know what I'm saying? Like, you have to be honest with yourself, and you have to have a plan. You have to have discipline. And if you don't, you will fail, period. Full stop. You will fail. I don't care if you are the smartest person on earth. You don't have a good trading plan, you're screwed. That's my tangent. How perfect would it have been if this instantly stopped me out as soon as I said that? 3, 2, 1, stop him out. Get him out of there. It was a bad trade. Liquidate me. I deserve it. Liquidate it. Take it out. Take it out. It was a bad trade. It wasn't a bad trade, actually. To me, it was fundamentally sound. Obviously, the short position would have been a more appealing trade. The technicals lining up a short entry were much stronger. And it's crazy because my initial read supported that, and we actually would have benefited from the move that just happened as opposed to putting me in danger. So what I should have done is I should have been patient. I should have waited. I fell for it. I fell for the head fake here. I admit it. I'm human. Totally. It happens to everybody, and it will happen to you if it hasn't already. And there we go. We're triggered. Get him out of here. He didn't deserve to make money. Boo. Boo this man. All right. That's fine. We will look for another setup. How about the one that I originally took? The one that I originally said I was going to take, which is looking much, much more attractive at the moment. All right. So are we going to fill the inefficiency or are we not? Going to the 15 minute. I want to see. That candle's about to get smoked. How crazy would it be if it just ended up holding anyways and ripping, which it may very well do. I mean, we're at the end of the pattern, the end of the consolidation. Something's going to happen. Now, I will say this. The last couple of moves have been buy-side liquidity sweeps over and over again. So I would not be one bit surprised to see Bitcoin do a bit of a head fake to the downside to sweep some of this trend line liquidity, because we haven't had a lot of tests of that. So my guess is that the real answer is right now, there's not really a good trade here. It's too choppy. There's no directional bias that has been established. What I was trying to do was catch the move prior to it happening, which is why I got stopped, why I completely deserved to get stopped there. I knew I was entering a choppy trade, and the market punished me for it, and it will always do it. The cool thing about it, though, is it's fair. To quote the Joker, or Two-Face, I think. It's fair. This market is equally shitty to all participants. Promise. Because for every time you're making money, somebody's losing money. So someone just made some money on me. Congratulations. Spend it well. All right, so let's start hunting for new setups. Let's see. I could take this. I could take the entry down here, but it's equally risky. I would say it's even more risky now with the weakness that's being shown here. However, the short position is also kind of dangerous because I'm getting strong interaction with the 15-minute moving averages, further supporting the idea that this is not a tradable moment. Yes, I can take a risk. I do think that it is very likely we are going to get some sort of like a quick wick down to sweep this liquidity, because Bitcoin loves to do that. It will probably come here, I would imagine, something like that. Oh, I know why it's doing that stupid curve thing. It's because I have the magnet on. There we go. That's better. We'll probably come down there, sweep the sell side liquidity there, which would put in a bit of a triple bottom. Or actually, it'd be like a quadruple bottom, because that would actually be stemming all the way from back here. You can see that right there. 1, 2, 3, 4. It's already been tested 4 times. So this would be the 5th time. So it'd be a quadruple top, sort of, right here. Okay. Tough to say if that would hold or not. Tough. But I could absolutely see Bitcoin doing something like that. Just a quick wick. I mean, the last couple of wicks have all been to the upside. We haven't really had a lot to the downside. I think we're kind of due for one. Markets are cyclical. They like to balance themselves out. So I just had a nice head fake to the upside. I think we should probably be getting a move to the downside. Some sort. Down to here, 30,163. That could be a really good buying opportunity. Because if you disregard the pattern, the support and resistance of the pattern, and you start looking at the order blocks instead, I can see that every time Bitcoin has come to that area, it's been supported, and it's actually put in higher lows that whole time. So I think that would be the more appropriate strategy here, is to use the order block. Excuse me, to use the order block for entry and exit. So I'm going to start sizing that up now in case it ends up happening. Excuse me, that was gross. All right. So now I have to determine what type of order block it is. Is it a wick-only order block? For example, only consisting of the area of the wicks here. I think that definitely has a strong case. Let's see if that extends back. Let's see if that area extends back and lines up with any other types of order blocks. Okay, I can see that this is kind of a bullish engulfing order block there, or yeah, bullish engulfing. This one right here is also wick only. I have a lot of strong price interaction, but I think that what I've drawn here is a little bit too shallow. I think it's much more appropriate to bring it down to here, to the bottom of that. So that would be what I'd be looking for. For the bottom of this move in the event that it happens. That's where I'd be looking to hold ultimately. Man, are you really going to reverse right now? Watch, it's going to do the partial decline, fake everyone out. What? It's not even going to get the move down. Ugh, choppy, choppy, choppy. I mean, at this point, I have to wait for a directional confirmation of some kind. Now, I will say this. We took out this swing high on this move and then pulled back. When we did, so initially we came up, we set this high here, right? Then we pushed back down to the trend line, okay, setting a equal low to the previous one. Then we came up and we broke that previous swing high here. Now, when we just return down, if this does end up being the bottom right here, that is another higher low after a higher high. So confirmation for me is going to be the break of that structure, preferably here. Now, I probably will not wait all the way until there. I will probably take this trade when it breaks this, the buy side order block that's been created here, when it takes out that swing high. Yeah, that makes sense. So that's what I'm going to do. That's my plan. And I'm going to stick to it too. I'm going to show you guys. I don't just say it. I'm going to do it. I'm going to live by the plans, by the rule that I just, scolded everybody for not having. It's not scolding. It's directing. Oh, by the way, here's my financial disclaimer. I'm a guy on the internet, guys. I am not a financial advisor. I am not a licensed financial advisor. I am a guy on the internet. Okay? This is not financial advice. I'm showing you what I'm doing. I am speaking to something that I love. I am only trying to show you how I do it. These are my opinions and mine alone. Okay? All right. So please understand, trade at your own risk, and do your own research. Okay. If you guys haven't heard that little disclaimer before, well, that probably means you haven't been in crypto very long. That's my liability waiver. Okay. By agreeing to watch this, you understand that Market Menace Trading is not responsible for any losses you may or may not incur. Thank you. This is not financial advice. Please contact a licensed financial specialist for all of your financial inquiries. Okay. There's my disclaimer. You're welcome. It's almost 2 o'clock. Okay, you know what? I think it's break time. I had 2 bad trades in a row. I want to break them down. I want to study them. I want to get some food as well. But this is my first upload to this channel. If you're watching it, that means that you are the earliest members of the newly formed Market Menace Militia. You are very welcome here. If you guys have any questions, please leave them in the comments. I will get to every single one of them. You have my word on that. No question is stupid except the one that you refuse to ask. Okay? Leave your ego at the door, and we will do our best to make everybody a long-term profitable trader. Okay? Thank you so much for your time and attention. It is always a pleasure to do TA for you guys. And I will see you guys in the next video. Thank you very much. Take care.